Hello, active traders, and welcome to our Trading Open live room session. I'm Ken Calhoun, president of the original Daytrading University. Since 1999, we've been training thousands of traders. We're here with the market open on August 2nd. Ding, 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 ding. And the S&P has started on a weak note today. Boom. Mean reversion pivot. So we want to play things that go up when the market goes down, like our semiconductor inverse SOXS. Hey, Ray. SOXS long over 32.4, I want to hit that, and UVIX want to hit that one over 8.2, okay? Or 8.3 as it runs up. Dun, 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 dun. Let's lock and load, gets ready for action here. 9.8, the next trigger for SQs. BSE, not going to play bounces, just like breakouts. Now, SOXs is starting to work out. Now, what's really important is knowing when the heck to get out if it goes against you. So we got in at 32.4. If you got in, great, you're up 23 cents, boom. But trail a stop at break even at 32.4. You don't want to lose money to the market. So if it goes up and goes back down, you get out with nary a scratch, right? I mean, we use 32.42 or something to cover commission. Whatever. I mean, 32.4 is a win. Next long would be up over this high. I don't know where it's at. Oh, let's call it 32.8. This is 32.85. This means that. Anyway, first long at 32.4, nailed it, baby. Boom. Flawless victory. He shoots, he scores. Anyway, sell half now. Try to stop and break even on the rest. Bank profits, right? I got you in 32.4, you have 40, 35, 40 cents. Right? Not too bad. UVIX starting to break through the 820. Can hit to 835 as well. And the market drops, trying to bounce. Now this punk, the SOX, so let's use 30.40 on this one. I'm going to bit earlier trigger in case we get a big upside reversal. Don't want to catch a falling knife, so you don't want to go long yet. What did I do? Sorry about that. Okay, so here we are. SOXS in the money, doing nicely. Next long, boom. I told you this would be going right. I'm the room you want to be in, right? Who else can nail them like this? Nobody. Ain't nobody does it better. Anyway, 33 is next resistance, whole number. Now we like to sell into whole numbers, right? And we like to buy above whole numbers. So when you're in the 80s, 90s, it's usually a good place to at least tighten the trail stop. So trail stop now at 33 even, okay? I got you in at 32.40, 32.85. We're rocking and rolling, and boom, he shoots, he scores. How much money could you have made had you taken Ken's alerts? Just saying. Trail stop at what? 32.10. Trail it up at 32.10. I don't want you to chase with the third shot. I think this is going to be it before reversal. Newbies, I want you guys to sell into the strength right now. If you got less than 10 years experience, sell it all and wait for a pullback and then resumption of trend. Because I want you to get in the habit of doing something you may not be familiar with, which is banking freaking profits. All right, I was almost $1 for my call. You got in at 32.4, sell at 33.30, up 90 cents. Boom! He shoots, he scored. Sell into the buyers. Don't F it up. No, it's going down again. What do I do? No, sell while it's green. Get out while the getting's good. Sell it all now. It's a top call. Out at 33.4. $1 win. He shoots. He scored. Just saying. I know how to trade. But what if it keeps going up without me, Ken? Well, don't worry about that. We're more about losing money, right? So bank a profit while it's there. Profit's profit. And we don't want to do a third trade. It's going to wiggle waggle and come back down any second. So sell into the buyers, right? Take the money and run. Boom. Hey, maybe this guy knows what he's talking about. UVIX, next long, 840, 860. etc. Working it on the way up. And what's going on with the broad market? It did exactly what I freaking said it would, didn't it? I told you that this, I called BS on the bounce, did I not? I did. As it was way up here, I said, it's going to drop on the open, and I was right. Trading 101, if you know the patterns. Of course, if you're not yet a live room member, you want to learn the patterns by joining my live room, for those of you who are not members, at daytradinguniversity.com/live. See, timing. Now's a good time to get out of all inverse instruments and maybe start looking for bounces in the directionals, right? I call the exact freaking top, right? Ha. Anyway, I've been doing this in a couple of decades. Next long, now that we put in the top, now we can put in the next long pair, which would be up over that top, which would be, let's do 33.7. Come on, Pindale. 33.7. But that's all you need to make it as a trader is, you know, back to that do. And that's all you need to make it as a trader is a few good charts and some good guidance and tips in terms of how to manage your entries and exits. So I called along for all of you starting at 32.40. I said to add in 32.85, 33.7, and we sold the top right off the, I'm sorry, 33.7 is the next line up there. We sold the top right near 33.40 or something, right? So that was good. Now UVIX starting to bounce here, not quite up yet. We're going to go in at 8.30. Our first entry is 8.20. So knowing what we know about risk management, what do? We go back to cash if it gets to 8.20. So cash out, that's a scratch, okay? Went up a little, came back down. No harm, no foul. We're out at break even, right? So that's good. You don't wait for it to go down there. So if you want to make it as a trader, you need to win more than you lose. So the important part of that is the lose side. You want to lose as little as possible. Break even exits are the way to do that. So got a big win in SOXs and a break even in UVIX. Notice, please, SOXs did exactly what I said it would. It was drop like a rock. Remember, I told you guys very clearly, sell it freaking up here now before it drops, right? That's important. Now, SOXL, I called it long earlier on the pivot. You can see now we're up near 30.22. Next line is 30.40. Okay. I think it's still going to cycle back down, and I think our SOXS is going to bounce any second. So let's look for a re-entry in our SOXS as well. Let's keep it simple. Let's just go with the earlier one. If it gets back over 32.85, we want to enter a second trade at that point. If it keeps dropping and chopping there, we leave it alone. So it illustrates a few things. You have to know the patterns ahead of time. It just simply isn't you don't have the luxury of time to try and discover what the patterns are going to do in real time. You need to have memorized and known these from experience so that you can make reactionary trades in real time that work out. So, and you know what's most likely to occur from pattern recognition training. And it said mean reversion pivot's likely to drop here in the morning. It did. I called the exact top of SOXs at the 33.40, etc. Right? And you want to re-enter this guy over 32.85. Let's follow up with this one, because this is kind of our stock of the day, right? So let's see if it wants to play ball again. And if it doesn't, then we play with SOXL. It's evil twin. So 30.40, we want to hit it on a bounce here, or 30.60, or 31.20. So one thing you really want to do is keep it simple. Unfortunately, we can't keep it slow because markets move quickly, as you can see. So to keep it simple, you need to just understand the patterns, follow my price alerts, because they're actually really good. You can see I'm usually really good at this. Follow my price alerts and then develop your own approach based on what feels most comfortable to you on your terms in a way that makes sense for you personally. And that's why I've trained so many thousands of traders since 1999. And these young would-be day traders out there don't know what they're talking about. Guys like me and Harry Boxer, and my other colleagues are worth learning from. Anyway, Harold Trump. nailed the call on the bounce, right? So I got both the breakout in the SOXs, and I got you guys out right within a dime of the top or so, and a bounce in the SOXL, which moves opposite to SOXs. Yeah. Now remember, I told you so to sell the 33.40. Remember I said everybody's selling to the buyers, sell us to green before it goes back down. And I got you out in plenty of time before the drop. Now I want to be clever here and look for pivots. I think this is still going to cycle back up again. So let's do 32.20, right? Now this illustrates a common idea that I've trained people in for decades, which is buying right above a whole number at a 0.1 or 0.2 level, and then your exit target, like here, right, was up in the high portion of the number underneath the whole number. So I'm going to go long this guy if it gets over 32.20. In the meantime, we're long SOXL, and it continues to rock and roll for us, right? Boom. Now, the quiz question. Where would you trail a stop in SOXL if you'd bought where it said at 30.40? You're now $1 in the money. You're welcome. Flawless victory. I called it long at 30.40 and again 30.60. But like I said on the last one, it's going to go back down again. It sure enough is. I guarantee it's going to go back down. Where are you going to trail a stop in this? Hit me with your best shots in chat. All right. I would use what? 31.20. 31.20. If it gets to 31.20, actually I'd use 31.30 myself. I'd be all out here. Sell it all. Sell all stocks on that. Top call. Sell, sell, sell. Boom. This is easy, right? Now what do you do? Stocks in. Hey, let's do 31.8. This is called pair trading. That's where you trade one against the other, especially. It works really well, like you saw today. 100% on my alerts on these, which is good. By the way, it's if you're a pro, you know how to do this, right? Now, I'm not saying it's easy, but it can be done. And all you have to do is keep it simple by knowing what charts make the best odds trade setups, and then being able to pick off the alerts that work and translate those into your own trades, right? We'd hit 31.8, 32.2, 4, 8.5, etc. on the way back up if this guy pivots. Buick's a nice drop. Let's see if we can get in on this guy on a bounce at say 8.10. Now, one thing you want to avoid doing is buying the whole number. And the reason is that's where market makers put their stops, right? Or the institutional high frequency trading programs are programmed to shake, they stop at whole numbers. So you want to use instead 0.1, 0.2 above a whole number, or 0.05, something right above the whole number for an entry, not the even number. Anyway, 8.10, about 8.20 as well. So one to go long in UVIX if it gets above 8.1, which it's about to do, and again, over 8.2. This is dropping up to where I would look for a bounce. I like that focus on more bounce to the ounce by Zap and Roger. More bounce to the ounce. Let's see if this one bounces. Looks like a short to me, right? But I'm not gonna, I wouldn't play it yet. But if it breaks the 540, sure, take a shot. By the way, so using my whole number approach, I used to teach college classes for University of Phoenix and Hawaii Pacific University and whatnot. Use a Socratic teaching method, which is asking questions, which explains why Socrates was poisoned, because it can be challenging. But anyway, if you go long at 540, where would your exit target be on that trade? And good traders are mapped out, with relatively good accuracy, where the most likely path is on a price action path is on an intraday chart. So if I buy the 540, I'm likely to sell or tighten up a trailing stop near 6, right? That whole number. So my whole number play is buy the 540, sell the 580, kind of thing, right? Buy the 540, sell the 570, 80, 90. That's the trade window right there. You can rebuy over say 610, 620. It goes zoom, but it's probably doing bad about. So that's how to do that. Sox is trying to get his bounce on. I'm confident it will keep going up. I would look for entries. Again, 31.8 was our first entry. That's been good. Trailing stop would be where? Our hard stop is a rule of thumb. I like to use 20 cents as a hard or trailing stop for stocks under, say, $30, $40 a share. Play really tight. So if it gets back to, say, 31.8, you may want to go flat. And if it gets over 32.2, you may want to buy more. So that's the nuances of intraday trades, is the importance of understanding the patterns and knowing how to put them in context of a trade plan that produces winning trades over and over again. And you just learn the cycle. You learn the patterns and lather, rinse, repeat, right? So of course you want to rush on over to my live room page at daytradinguniversity.com/live and join as a member. Good place to be here, and I guarantee your satisfaction. So the risk is all on me. So working with me in the trading room, I've had traders be with me as long as 21 years. And so thanks for that. Let's see where things are headed. One thing you want to do now and then periodically is check the SPY chart, the spiders chart, or the ES if you have an E-mini chart, and take a look at the direction and volatility of the market. What's the directional volatility look like, and what kind of range do we have in the first 10, 20 minutes? So relatively compressed ranges. Notice please the cycle up and down of the S&P, even in the pre-market. We go back and include the pre-market. Cycle up was this far, down this far, up this far, down / chop this far. So the market is still relatively range bound between 534 and 537. The market between 53.40 and 53.70. Now this is a weak consolidation pattern because of a bearish engulfing. Again, be sure to learn candles from my colleague Steve Nissen at candlecharts.com. He's an outstanding world-class trainer and teacher and expert, and the guy who knows the most about candles. And they often work. So frequently they work. They work astonishingly well. The only challenge is that you don't see candle patterns at every single place you want to see a pattern, but when they do appear, they're very good. And if you know what to look for, and Steve will be the guy to teach you them, they can really help. So anyway, this is bearish engulfing, and that tells me that's weak, right? So that, even as I was speaking, it dropped. It's like it heard me, right? It said bearish engulfing, market heard me, and boom, it dropped. I do have Wall Street guys on my channel here, so anyway, so that's dropping. What's going to pop? Boom. When we get back in stocks on any show of strength, 32.40, 85, and so forth, right? You just throw darts at it. You know, folks, it's not rocket science. It's not like you have to be a genius to get this, even though it helps. It's not necessary. What's necessary is to have the intelligence to visually scan for the patterns that work, and that's what I do for you guys here in the room, and then figure out the entries and exits, which I also do here for you. So. Well, thanks. Appreciate the kind words. Thanks, Marty. Thanks, Phil. So SQ is starting to bounce. 980 is our trigger. I still like stocks is the best instrument to trade today. But again, as I pointed out to you when I called the real-time exit for everyone at 33.40 within a dime of the exact freaking top, you have to time it, and you have to trail stops carefully to lock in gains before the market takes it back. There's nothing more frustrating than being up, 800, 900 bucks, and then screw up by squatting around and being overly optimistic. Yeah, it'll keep going up to 100 or something. You're back down, it's flat or even in the red, right? How many of you have done that? Whenever I ask at money show events when I speak at, I've got standing room only crowds. I always say, how many of you ever done this? Where you get in a trade, you have to say 800 bucks, and you say, well, it's going to keep going up. Surely it's not going to stop. Look how strong it is. And then 10 minutes later, you're back at scratch or in the red. And everybody nods their head yes and says yes. So that's true. So instead, you want to sell with tight trailing stops as I teach here, right? I'm the guy who does that. That's why I get the call. We nailed it on the bounce calls. You're welcome. So where would you trail a stop? Let's say you bought my winning stocks' second round of alerts. I mean, I'm just batting 100 on this sucker, right? Boom. Where would you trail a freaking stop on this thing? If you bought stocks, where would you trail a stop? Hint, we're day trading, we're not swing trading. So you don't have 10 minutes to answer. You got like 30 seconds to answer. Where would you trail a stop? Right, like 32.30, right? 32.20 at the lowest. don't let it go back down here. You sell up here. All right, I got you in at 31.8, 32.2, 32.4. That one would be a flat. So I would sell. Let's see, we lost the 40. Yeah, I'd go ahead and stick a fork in it here. Sell it all now. So you'd have two wins and one minor stop. Net is still a win, right? 31.8, 32.2, 32.4, still in the money. So you'd sell it all here and rebuy if it gets a new high for, say, 32.85 or so. And you can see the S&P is cycling up and down. A quick note, there's often a 10 o'clock reversal, give or take a few minutes. Whatever the prevailing trend is, whatever the current trend is, often slows down a bit or outright reverses at 10 o'clock Eastern every single day, give or take a few minutes. Go back over the last year's worth of S&P charts and see for yourself. Oh yeah, there was a 10 o'clock reversal often. So be ready for that. What that means to you as a trader is you don't want to enter a directional trade, a trade that's going in the direction of the market right before 10, because often it'll put on the brakes and skedaddle and go back down the opposite way. So that's just another mini tips that you learn, and it's not live, remember. Thanks. Thanks, Larry. So now we're kind of no man's land, right? We're in a wasteland. A great wasteland out there. We're foraging for survival. As the market is chopping around, so we do not want to go in heavy on anything right now. Sometimes the best trade is no trade, and when the market's uncertain and choppy, as it often is in the few minutes leading up till 10 o'clock, it's a good time to go out and celebrate the wins we had earlier and get a coffee or something, right? Bum bum bum. Ba-da-da-ba-dum. Ba-da-da-da-ba-dum. I need to have something that plays music around here. And I got my keyboards from. Got a killer music station. Yeah. Those of you like bass, I've got Novation Bass Station 2. I've got two of those wicked little keyboards, a Roland D50 and a mixing board and drum machines, all the rest of it. Anyway, market still looks like it's trying to hold on to its gains here. It's consolidating, but it's not dropping sharply. So it's just kind of up and down slightly. I would call it a slightly long bias market because we're in an overall directional uptrend. But with so much weakness earlier on that big drop, that puts it in perspective. I'm going to say we're still overall a short market, right? So most recently we have a slight uptrend. Ever since that big drop started to bounce, we're in a slight recovery mode. But big picture, this is a broken market and this is a short market. It's a place to sell. See, I told you so, right? So now, what's likely to come back to life? This is kind of nice. The market's giving us a 2-minute heads up that it's a short bias market. So what that tells us is we're going to start working into SQs and SOXS at sooner rather than later entry. So when you say 9.8 on this guy, so consider long S triple Q if it gets over 9 point. Actually, it is over. I'm sorry, it's 9.8. Delay that. It's like that. And I never buy 9, so I'll have to put it way up at 10. Okay, next long will be up at, or 10, I can't put that up here, but 10.10. If you're in a great hold, if you're not yet, then wait for it to break the 10 and SOXS. I'll look at say 32.7. Right. One of the things that I've discovered as an active trader this last 25 years is that the patterns often repeat, but they often have irregular, exceptions. And so we can't micromanage the trade. You want to be able to develop a trading approach that capitalizes on the breakouts very simply, and then gets out at the first sign of trouble. That's what I did this morning when I had to go long at 32.4 and sell up at the 33.4. That was a good one point round trip for you guys. It's a good approach because it keeps things simple. We don't need a bunch of squiggly lines. I don't use moving averages or that kind of thing for intraday trade. It's all price action and price point based and order flow based. Right? Because that's obviously an upturn. We're going to go long heavy over 830, right? 840, anywhere from there. BC still looks pretty weak. I would hit it over 540. I wouldn't touch it down here though. The market bounces, and we're going to go long or leverage ETF, the alter Qs, the TQs, if it gets over 59.4. We're kind of just kind of bopping around right over the whole number without any show of strength, so it may well drop under 59, so I wouldn't go long yet, but if it gets over 59.4, that may give it enough pickup to get up to the 60 and beyond. Same time as SOXL. It looks weak, but if it gets over, say, 30.40, I'll take a shot. So just a reminder of 32.85 as a trigger. And say 33.10. That's what you want to do. You want to kind of use a ladder of price action, right? A ladder of prices that you scale into. That's how I trade. I may do 3 or 4 entries in a given run before closing out loud on the 5th, say, rollover entry. So that's one way to do it. And again, another way to keep it simple is just to like buy the first alert and just let it ride for the rest of the day. It's up to you, but there's so many great charts and so many good trading opportunities out there. That just makes sense to learn exactly how to do that, right? So note we are getting close to 10 o'clock. We're currently at 9:57 in the AM East Coast time. And we do expect, a pivot. So the current directional move is down. So I would expect a surprise move up by the market. It would not be a surprise to me, knowing ahead of time that we often get pivots near 10 o'clock and we're near support. Now what I prefer to see is a big drop. And we may well get that too, but you want to be ready for an upside pivot. And what I mean by that is that you don't want to go heavy inverses just yet. You want to go light inverses, it's fine. Maintain inverses if you're still in with tight trailing stop. You don't want to scale in size on inverse instruments like the SOXS, or UVIX, or SQs until we get, say, under support and stay under support under the 534 or so for at least a minute or two. Boom. Schwang. Paching. Inverses. It's how to trade the crash. Now again, big picture, I would expect lots of selling between now and November 4th, and depending on the outcome of the election, we may well get a big relief rally. So you want to manage accordingly. Now's a good time to be mostly cash, by the way, and intraday inverses. That'd be the, I can't recommend a trading style, but of all the styles out there, I would maintain a basket of inverses for swing trading, as well as intraday trade them, and occasional gaps in whatever random gap of the day charts are out there. But the main thing is the market's likely to drop and chop between now and the election on November 4th, and then get a relief rally after that. So what that means to us is we really want to focus on trading the exceptional moves very carefully. Now, I did tell you the market was likely to bounce right at 10 o'clock, and sure enough, it is starting to bounce off support at 10 o'clock. That should be kind of common sense, right? You should know that. I traded 101. We're at support and we're at a key reversal time. So what happened? Hey, the market bounced. I'm going to say that's not likely to be a big bounce. It's likely to be a baby bounce. We're likely to see a dead cat bounce. We're still likely to see significant selling pressure later. So that's about it. It's bad my brothers that I would conclude here. I walk out ahead, but I will stick around until 10:30, as promised. But that's the main educational part of what I want to teach today. You can see it's very accurate, right? If I do say so myself. It's all about just memorizing the timing patterns, right? And understanding how markets respond and then how to capitalize on that by trading volatile instruments within those markets the right way. And since this guy still headed up despite the market trying to bounce, that's good for it. So I would continue to trade into UVIX. I'm in it myself. Quite a few hundred shares right now, and scale in on any continued strength because it's got a long ways to go up. Notice a big as heck recovery in volatility since early August. Well, since yesterday, it's been quite a mover, right? Big picture, though, if you look at, say, the daily or the weekly, anyway, it's been a big drop. But since we're starting to get a big, heavy bounce out of it, it's a good play. So it's climbing up out of the pit, right? That's what I call the charts that do that. Climbing up out of the pit, we're above resistance. We're in the blue here, or in green skies. The blue skies are in the green. I'm going to look at new longs over, say, 840, 860 in every 20-cent increment. And what I found in my own trading is that my most profitable trades, my best wins, are almost all before 10 o'clock. My worst trades are usually after 11 o'clock, right? So I learned, and so I don't trade much after 10, unless I see something really, truly exceptional. And, those will occur from time to time, but in general, I like to be done by 10. And that's a great benefit to my approach is it's, we have a few really good wins and we walk out, right? And that's what we want to do as traders. You don't want to waste your life by looking at multiple monitors all day long, getting yourself a headache and who knows what else, and getting bored and tedious. You want to hit and run, right? I'm a hit and run guy. So you come in, take a profit, a few stops along the way, and walk out a win, and that's it. That's the goal. So I will stick around for a minute. I'm going to take a quick break. I'll be back in just a few minutes. Thanks for being here. Appreciate it. All right, well, I'm back, and as you can see, my alerts worked out spectacularly if you took them, right? Really good plays in our SOXS, and UVIX is skyrocketing like a champ. Boom, punaching, flawless victory. So if you can find another live room that has this good a performance on alerts, go for it, but I don't think you will. Just saying. So the place to sign up again is, I should really be charging a lot more, and I am going to raise the rates, as I always do anyway. Daytradinguniversity.com/live. Do it now. Operators aren't standing by it. Anyway, it's all good. Anyway, did you guys get a piece of this, right? I got you in starting at, what was that, 8.1, 8.2, etc. Now we're up at 8.7. The trick is sell it before it drops. Hey, thanks, Matt. Boom, nailed it. Bum, 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 bum. Trail stop where? Well, pick a number really tight, right? Like 8.6. I'm gonna use 8.7 but 8.6. So maybe 8.65 if you're in size. 8.65 through. Let's make it, yeah, 8.7. Trail stop on your UVIX at 8.7. Trail stop on SOXs at say 33.30, right? Bum 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 bum. Trail stop now, 8.7. Any questions? Peace, I'm out. Oh, that was good. That was brilliant, right? That was really good calls, I think. Got you in and out on the way up. Good wins on the first leg up, and really good win here on the move. Again, this is a good example of selling into the nearest whole number, which would be 9. This would be a really good place to take the money and run. Top call UVIX, sell it all now. Boom, sell it. Sell, sell, sell. Sell, 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 sell. Buy again if it gets over 9, say 9.10, all right? But I'd sell here at the 8.7 or 8.76. Top call on all inverses. Sell all inverses now. Sell, sell, sell. And that's how a pro makes bank, right? Boom. Any questions?